Hey guys, welcome to Faith and Fortune. I'm your instructor, Collie C, your mentor, and today we're going to be talking about investing. If this is something that you probably have heard all the time, like go invest, go invest, go invest, and if you're anything like me years ago, I was like, dude, I know you're telling me to invest, but what do I invest in? What? Because the how was important for me. Like I already had the how taken care of, but not the what. But when I was first starting out, a lot of the people around me didn't have the how. They didn't have the faith. And I think that the first step with investing is having faith that it's even possible to invest and to change your situation. The best time to invest was yesterday. The second best time to invest is today. But why even invest in the first place if you don't even believe? Belief and faith is the beginning that you can even improve your situation. Now, I'm talking to the very bare minimum basics. I'm already assuming that you believe in yourself. That's why you're here. But there are people who don't even believe it's possible. Nah, don't even do it. It's not going to work out. Like they have these limitations of stopping them from even beginning. The first step is having faith. And the second step that I think you need to do is like, where do we start? Where do we start with investing? Now, you need the how. The how will come, but you need to have the faith first. Okay? Now, if you're trying to figure out the how, the number one asset that I think you should be investing in, which is the absolute one thing that it'll never return void. I know that sounds pretty crazy thing to say, but this is the one investment that will absolutely always give you a return. Always. Is yourself. Because your brain, in between your eyes here, that is the one thing that's going to be with you the rest of your life. And I'll just say it right away. There is no perfect investment. There is no bad investment. What do you mean there's no bad or good investments? No. It all depends on your goals, and determines whether it's good or bad is all because of you. You are your greatest proposition. If you read the book, The Killing Sacred Cows by Garrett Gunderson, he says that you are the greatest proposition. You are the reason whether a deal is good or bad, because you are the one who either makes it good or you make it bad, or you educate yourself, which is why this is the number one, because you're pouring education into your brain. And the more educated you become, the less risk that investment becomes, because you either understand it more or you understand it less. And I think that you should absolutely not invest in anything that you do not understand. Because that's just gambling, and that's just what everyone else does. And if you want to be an investor, you have to understand it. People follow the crowd, people follow the sheeple, and they just do what everyone else is doing because they don't feel secure enough to invest in their own decisions based on their own knowledge, because they don't have knowledge. They're just doing what everyone else is doing. And are you going to be a gambler or a sheeple following the crowd, or are you going to be an investor? And if you want to be an investor, you absolutely cannot invest in anything you do not understand. If you do not understand it, stay away from it. Because if that lack of knowledge is going to be your greatest risk. Again, the more knowledge you have, the less risk you have. If you want to de-risk yourself, you have to have more education. Therefore, the number one investment that will always never return void, it'll always... Now, you may be thinking, well, what do you mean? I may have just invested in some courses or a mentor, and they screwed me over. Or I read this book and it was nonsense and it was all fluff. Okay, well, now you know it's fluff. Now you had that experience that you can add to your checklist. Now you know what not to do again and who not to trust. And now you have these little indicators that help you, hopefully, avoid that situation again. That's knowledge. That's experience. Experience is a way of education in a way, because you now have more knowledge. So number one, you should be spending as much information, and there's a Bible verse in Proverbs that says spend all of the money you can afford on wisdom. And I think if you're in the beginning stages of investing, you should be spending all the money you can with hiring CPAs, maybe spending an hour of time with them, going and paying them for an hour and asking them questions about high level tax questions, paying mentors, paying people for their time, taking them out to lunch, buying them lunch, like investing in other people's time and asking them questions. YouTube's a great resource. I spend $20 a month on a premium so I don't have advertisements, so I can watch and consume as much as I can on YouTube. And you can search any subject you'd like. Now, I'm not going to suggest it's the most high quality, but at the end of the day, the more information you consume, the more you can start to filter out what is good, what is bad, what's repetition. Okay, I noticed a pattern here. This guy says this guy seems like he's very successful. Well, this guy says the same thing. This guy says the same thing. And you keep studying different people. That's something you should do. Reading books, buying audiobooks, buying physical books, constantly improving in your mind. You should always be doing this the rest of your life. You never get to a point where you're like, okay, I'm done investing in myself. I'm just going to now invest in hard assets and other things now because I'm done investing in myself. That never happens. This is something you're always going to consistently be investing in. It's crazy to me that people will spend $5, on a coffee, or $15 to buy some gasoline or something like that in their car, but yet they're afraid of spending $5 to $15 on an audiobook. Or they'll spend $200 on dinner with a date or for their own self, but they won't spend $200 on a course. Or like you guys did, you invested $5. You invested some income here to invest in this school community. People won't do that because something about it is they're afraid to invest in themselves, but they're going to spend money on recklessly. They'll buy a $500 Xbox, but not a $500 event ticket. So you got to flip your mindset and start being okay with investing in yourself. That is number one. Now, once you have enough knowledge and education, again, now your risk is lowered, and now you have information now to be educated to make investments in hard assets other than yourself. And when you buy these other investments, the more knowledge you have, the lower risk you take. Okay, so let's go through a list of some assets here. Now we're just going to call this hard assets, physical assets, things that you physically have in your possession. And when there are these types of assets, there are two types of assets, or categories, I would say. You have, I'm going to split it in between here. You have equity, what I call equity, and then what I call cash flow. And then you also have equity plus cash flow investments. Some are just cash flow only, some are just equity, some are both. Now, what does this mean? Well, for example, you might consider, I'm going to read a list to you here. I'm going to read a list and we're going to categorize them a little bit. So typically the best assets, we'll talk about that. Like it's all according, like I said, there's no such thing as a good or bad asset. It's all depends on your goals, and it depends on how much you de-risk it based on how much you understand it. But I'm going to give you a list here. We have precious metals, gold, silver, palladium, copper. We have real estate, rental properties. We have collectibles, trading cards, fine arts, wines, luxury watches, jewelry, classic cars, equipment, machinery, inventory, crypto, livestock, farmland, storage units, commercial real estate, laundromats, car washes, vending machines, boats, RVs, parking spaces, garages, tools, equipment, musical instruments. That's just a list of many different stocks. And if we're going to go off of that list, I'm just going to list a few of them here. So we'll put stocks primarily under equity, but you can find some that have investments or dividends. So we'll put stocks on both, but typically I would say most of the time, most people are presented with just equity. And I'll explain what that means in a second. Watches, depending if you rent out your watches, you can potentially rent it out to people. Rental cars, real estate, RVs, car washes, crypto, farmland. Well, it depends, but farmland could be on either side. But let's just describe the differences here. If you invest in an asset, like let's just say a watch, or let's just go precious metals. Let's go precious metals. You buy yourself a coin, and that coin is just sitting there. It's preserving value, which is say more on the equity side. You're preserving value. It's not paying you per month, okay? It's just holding value. Your cash translates into this item. It's just holding value, therefore that's wealth creation. Let's go into the differences between wealth and being rich real quick. The definition of rich, so there's rich versus wealthy. Now they're both important, but rich is flashy, how much income you can spend, what people see. That's rich. Nothing wrong with it, but that's what rich is. Now, creating wealth is different. Wealth is literally the money that you don't see. It's future value. It's literally money you don't spend. It's completely the opposite. It's not flashy. So you have a combination here of rich versus wealthy. And I would say that if you're buying precious metals, gold, silver, that is not giving you cash flow, which is not making you rich at that moment. It is just building wealth. It's holding cash. It's holding value. However, if you have a business that can build wealth as well, it can have equity, meaning that it holds value and you can sell it for something in the future, and it also produces cash flow, which increases the rich side. Now, what you do with that money, if you continue to spend it, that's more of the rich side, right? Income side. If you reinvest it, it's on the wealthy side. So you can see here that it depends on your goals. Are you trying to get rich, or are you trying to get wealthy? Or are you trying to do a combination of both? So when you're investing, think about, am I wanting to increase my cash flow, my income, or am I wanting to increase my wealth, my preservation, or both? There are assets that do both. For example, real estate. Let's do real estate real quick. You have somebody living in this house. They're working 30 days a week to pay you cash, and this is you. You went to the bank, or you got a mortgage of cash, and here's the bank. They basically say, I'll give you the cash, you give me an IOU. Okay? You now have to pay back monthly this bank for the cash they gave you. You take this cash, you buy the real estate. Now these people are working for you every day to give you cash every month. It's paying back the bank, and then the extra you get to keep. So over time, the amount you owe the bank goes down, and that's called equity. And you also have cash flow. So that's equity plus cash flow investment. Now, if you took money from your job, invested into precious metals, that's just an equity investment. It's preserving wealth, but it's not paying you cash, unless for some reason you were able to lend it out. Now, there's options like that. Maybe you put your gold in a vault and you lend it out to people, and basically that can exist. That happens. You can do that with crypto. You can do that with stocks. I mean, well, I don't know if you can do that with stock. Can't lend your stocks out to somebody else, but with dividends, that would pay you cash. Again, that's the differences. So what I'm going to do is I'm going to include some links on some websites where you can buy some from trustworthy places of precious metals, for example. And I'm also going to plug in some resources to where if you want to start learning about real estate, which again, education is number one. You got to have education to then invest into hard assets And then the more you educate yourself, the lower the risk. It's that simple. I'm going to connect you with some information of people that can help you with real estate experts within our group. And I'm also going to post some spots where you can just have some actionable steps today to buy some precious metals. We'll go into a more detailed crypto video in the future. That's going to be specifically for crypto, how to have a cold wallet, how to protect your crypto, where to even buy, what even is crypto, how to get started, because I know that is something that people don't even understand, but I'm going to help you understand it in another video. But as of right now, I'm going to post some links so you can actually buy an asset today, take some of your cash, invest it, and protect it into some precious metals. Now, we can talk about inflation just a little bit here so you understand why. Why would you invest in precious metals? Well, the United States, or I should say the Federal Reserve, which is a whole nother can of worms. We don't have to talk about the exact robotics system of that, but the cash is being debased in our society. What that means is, I'm just going to give you an analogy that you can understand. That's very simple. Imagine if there was only one apple in the state of Florida. The whole state of Florida, just one apple. Now, all these millions of people would want this apple. Therefore, the price is going to be millions, probably. Now, if there's two apples, it's still going to cost a lot, but it's not going to cost as much, but it may still cost the same. Now, as people start growing more apples, and now there's a ton of apples in the state of Florida now, the value goes down because of the supply and demand. So now that people are creating more apples, the cost of apples now is like only a few cents. Now that is exactly what's happening with the dollar. The United States dollar is being duplicated like an apple, being printed, and more dollars are being created and being thrown into our United States ecosystem. And the more dollars in the United States that are in the market, the less valuable, the less buying power they have, and the market has to adjust, and the market just ups their prices and readjust their prices to become more expensive to match the actual value of that dollar. And when that happens, we would call that inflation. Now, it's a little bit more complicated than that, but that's a simple version of understanding it. So when you work for your dollars, you work 30 days, all month long to get all these dollars, they're losing value. Every single month, your dollar has less buying power because more dollars are being printed. So in order to protect your dollars, if you just put those dollars in a savings account, which can be good in case you need it for investing, but if you had all your dollars in there over the course of 10 years, the value would diminish a lot because they're going to keep printing. So how do you protect your buying power? How do you protect your value? You convert a portion of these dollars into assets that hold value. Now, one of the number one assets that I think that has been shown for 5,000 years to hold value is silver and gold. When you convert that, you might have a $30 and you convert it to $30 value of a gold coin, equal in value. Now, as the dollar continues to debase and continues to lose value, that $30, the buying power is actually 25 in a few years. And then maybe a few years later, it switches to $20. Your gold coin has stayed at the value of $30 when you bought it. Very basic way of understanding it. You'd have to understand what that means, but this never loses value. This does because it's infinitely increasing. Now with gold and silver, gold is not infinitely increasing. There have gold mines. They do discover gold every so often, but some would argue that the amount of gold that they find is at such a small amount that the price pretty much stays the same in terms of the value. Now, if the gold price ever does increase, that's a whole nother video. All that means is that it's not increasing truly, it's just matching what the value should be in dollars. So the gold itself will always buy what one ounce of gold will always be equal to whatever the value is. And this value can be 1 ounce of value. If you had 2 ounces of gold, you have value times 2. This will never change. You can bring this 1 ounce of gold to Egypt, to any country, and you can buy equivalent of what this value is. They're just going to look at that, they're going to look at the market, and they're going to say, okay, well, that's actually equal to this many pesos, or this million rupees, or whatever. But it's always equal to what the value of that gold is, or this many dollars. So if you have a lot of gold coins, and then you fast forward into 50 years in the future, and you go, and then the United States dollar has been debased a lot more, where now it costs $100 to buy a piece of bread. You turn in that gold coin to a place that, like a coin shop that can buy it from you. They're going to give you the equivalent of what it's supposed to be worth in today's dollars. So essentially, it's a savings account. It protects your savings, because if you held those dollars for 50 years, essentially your $50, if you had like $500, it would be worth maybe $5, give or take. I don't know. It's just for the sake of argument. And now you have all these dollars. You have 500 of them, but they're only worth the buying power of $5. So now you're like, what the heck? I just got stolen. I just got gypped. All this hard work was for nothing. Yes, because that's what happened. Unfortunately, the Federal Reserve is printing so many dollars that it is doing that. It is debasing and stealing the value from the dollars that we work hard for. So to protect your hard work that you worked hard for, or you spent a bunch of time getting that value, immediately you transfer it into a system or into another currency, another value system that holds the value, like a business or gold, and it holds and preserves that value. And then if you ever need dollars again, you can trade out of it. But to keep and it's not financial advice, but most people would say that if you keep 100% of all of your wealth in dollars, it's not a smart move. Think about it. If you had a bunch of apples, again, if there's only a few apples in the state of Florida, so you said, okay, I'm just going to buy as many apples as I can and just keep the apples forever. But yet you knew that people were down the street growing more apples. A smart person would know that eventually your apples are not going to be as rare, and they're not going to cost as much because other people are starting to have them. So you would say, you would see that foreshadowing, you would see that tidal wave coming, and you'd say, you know what, I see that's going to happen. So I'm going to diversify a little bit, and I'm going to get out of the apples and start getting into other fruits or other types of opportunities that are less valuable or more valuable, less rare, or more rare, than the apple. You would start to buy bananas. If there was a very rare fruit that people were not selling, you would get into those other fruits, you see? So if you see the dollar is going down daily because they're printing out trillions a day, then you know you can't hold that many dollars, or you can't hold all of your wealth in dollars at least. So that's why people rush to gold and silver. It holds value. They're not printing out. You can't print more gold and silver out of the earth. You can find it, but it's a limited resource, limited, scarce resource that eventually will continue to decrease because people use it and they lose it and they burn it and stuff like that. So anyways, crash course, but I'm going to post some links that you can get into some precious metals right away. That was probably the first asset that I ever got into, was precious metals besides books. So again, I think books should be your number one. Education. Books/education. That could be mentors, professionals that you hire. 2 should be precious metals. 3 can be businesses. I have a rental car business and they spit out cash flow for me. So for me, it was after studying real estate for a long period of time, I realized that I applied the same principles to rental cars. And for me, that was my asset, my business. And I'll be posting a Turo class soon, so you can understand how I did that specifically with Turo. And you have businesses. And I think that's pretty much sums it all up. And then of course you've got speculative assets. And I just think that these are the ones that you should be not focusing on first, because it's easier to get a return with books, precious metals, businesses than speculative. I think that speculative should be not your number one priority, because it's like, okay, I could put $20 into this market. It may or may perform, may or may not perform, or I could put $20 into a book, and I'm for sure guaranteed going to get information from this book. Versus precious metals, same thing. I'm guaranteed to get equal value exchange. And then a business is a little bit more risky. It's not guaranteed, but the more you study it, the easier the business investing becomes. Same thing with speculative. The more you study, the less speculative it becomes. So this is the order of investing that I would do. And of course, trust the process, continue reading, continue learning, and of course, continue watching videos and content here in the group. Collie C out.